So if you send an email to a server in Tokyo right now, it arrives in like milliseconds.
Yeah, practically instantly.
Right. But if you try to send $100 to a rural village in Kenya or, a supplier in a developing market, it might take a week.
Oh, easily a week.
And it has to route through like 3 different intermediary banks, and you lose a heavy percentage just to wire fees.
Yeah, it's crazy.
I mean, the data moves at the speed of light, perfectly fine. But the trust definitely does not.
No, it really doesn't. And I think, it just highlights a massive friction point in the global economy right now.
For sure.
Because the underlying architecture of international finance, it wasn't built for a borderless digital world.
Yeah.
I mean, it was built on analog ledgers and physical borders and, frankly, highly exclusionary criteria that determined who is actually allowed to hold capital.
Well, welcome to a custom deep dive into the absolute frontier of fintech. Today, we're looking at a massive stack of articles, research, and your own personal notes on a company called ATMC.
Yeah, there's a lot to go through here.
There really is. And our mission today is to figure out how this specific, highly aggressive player is actively rewriting the rules of the global economy for you.
Right.
We are going straight into the mechanics of how they're deploying software to just bypass traditional banking gatekeepers entirely.
And ATMC serves as an incredible case study for this because, well, they aren't just building a sleek mobile app and, calling it a day.
Right, it's way bigger than that.
Exactly. They are deploying enterprise-grade infrastructure directly into emerging markets.
Yeah.
Everything from microfinance algorithms all the way up to artificial intelligence fraud detection.
Wow.
Yeah, it's about fundamentally altering the mechanics of accessibility, systemic efficiency, and trust.
Okay, let's unpack this. Because to truly understand how this technology impacts you, the listener,
Yeah.
we can't just talk about, fintech as some abstract concept.
No, you have to look at the ground level.
Exactly. We have to look at the sheer physical reality of ATMC's product catalog. And looking through your research, they offer hundreds of specific, ready-to-deploy platforms.
Oh, yeah. Digital wallets, stock trading, investment apps.
Microfinance tools, enterprise accounting software. But the beating heart of all of it, right, is their Bansi Plus core banking system.
Yeah, the Bansi Plus core. The term core banking system gets thrown around a lot, but fundamentally, it is the absolute central database of truth for a financial institution.
Okay.
It's the centralized ledger that processes daily banking transactions, and posts updates to accounts and all those other financial records.
Right.
Without a robust core, all those individual apps, like the wallets and the trading platforms, they're just shiny interfaces with nothing driving them.
Yeah, in the original notes, I tried to map out how these pieces interact, and I came up with an analogy. So ATMC isn't just selling a digital car to a local bank.
I like this, yeah.
They are dropping a fully integrated, prefabricated digital highway system into a market.
Basically, yeah.
But here's the critical part, right? It's an intelligent highway. The accounting software is the physical paving. The digital wallets are the vehicles. The payment gateways are the toll booths. But the Bansi Plus core, that is the traffic control center constantly communicating with all of them.
That's a great way to put it.
Like if a toll booth registers a massive influx of vehicles, it instantly tells the core system to reroute the underlying liquidity to support that volume.
And what's fascinating here is how you mathematically secure a dynamic system of that scale. In any banking software, data input validation is the single most terrifying vulnerability.
Really? Why is that so terrifying?
Well, think about it. If unverified data alters the central ledger, the entire digital highway collapses into chaos.
Oh, wow. Yeah, I guess someone could just add zeros to their account.
Exactly. So to prevent this, ATMC engineered the Bansi Plus system with a strict makers and checkers logic.
Okay, I was reading about that. On the surface, makers and checkers just sounds like a standard two-factor authentication, right?
It sounds like it, but
Like, I enter a transaction and my manager hits approve, but
Yeah.
looking closer, the mechanism seems much deeper than just 2 passwords.
oh, it's way deeper. It is a cryptographic separation of duties embedded into the state machine of the software itself.
Okay, what does that actually mean in practice?
Well, when a maker initiates a transaction, say a massive commercial loan disbursement, the system does not execute a state change on the ledger right away.
It holds it.
Exactly. It generates a temporary session token and places the funds in a cryptographic holding pattern.
Oh, I see.
And the checker doesn't just hit an approve button. Their credentials initiate an automated algorithmic sweep that verifies the transaction against the institution's real-time risk parameters.
Wait, so it checks the risk before the money actually moves?
Before the state change is permanently written to the database, yes. It completely eliminates the possibility of unilateral rogue entries or even just accidental catastrophic typos from physically moving capital.
Wow, so it basically prevents financial leakage at the architectural level.
Exactly.
And that real-time verification feeds directly into their management information systems, right, the MIS.
Yeah, MIS dashboards.
Yeah, the documentation mentioned these dashboards showing the expenses versus business ratio for local branch managers, and I'll admit, my eyes kind of glazed over a bit at that term.
It's a bit dry, I know.
What does that actually tell a manager on a Tuesday morning?
So it gives them a real-time pulse on their operational solvency. You see, traditional banking often relies on trailing indicators,
Meaning what, exactly?
meaning you find out you lost money 30 days after the month closes.
Oh, yikes, that's way too late.
Exactly. But the expenses versus business ratio dashboard takes the immediate operational burn rate of a specific branch. So rent, electricity, payroll,
Okay.
and it maps that directly against the real-time yield of their active loan portfolio and transaction fees.
Oh, wow, so they see it happening live.
Yes, it allows a manager in a mid-sized enterprise to spot a liquidity crisis weeks before it happens, and they can adjust their lending strategy on the fly.
Which is an incredibly powerful tool to hand to small and medium enterprises.
It's game-changing.
But let's shift the focus from the architecture to the human beings actually using it. Because ATMC drops this robust, mathematically verified highway system into a developing market. But a highway is entirely useless if the local population isn't actually allowed to drive on it.
Right, and that's the big problem with traditional banking.
Yeah, we know that multinational legacy banks have largely ignored huge swaths of the global population because they lack Western-style credit histories or, state-issued IDs.
They require a paper trail that simply doesn't exist for a massive percentage of the global workforce. I mean, we're talking about smallholder farmers, independent artisans, informal market vendors.
Yeah, and I was looking at your notes on how ATMC handles onboarding these populations, and I got genuinely stuck.
Oh, really? Where?
Well, if someone doesn't have a formal state-issued ID, how are you legally creating a bank account for them? You can't just take their word for it, right? Doesn't that invite massive default rates?
You would think so,
Yeah.
but the solution lies in how fintech is redefining the whole concept of trust. ATMC bypasses the legacy banking mold by licensing their architecture directly to SACCOs.
SACCOs, that's savings and credit cooperative organizations, right?
Yes, exactly, and hyperlocal microfinance institutions. These organizations don't need a centralized credit bureau because they rely on digitized community trust.
Wait, digitizing community trust? How does software actually measure that?
Well, a SACCO is generally organized around a specific trade, a union, or maybe just a geographic village.
Okay.
So the members inherently know who the reliable farmers are and who the high-risk individuals are. It's social capital.
So ATMC just gives them the tools to use that.
Exactly. ATMC provides the core banking software that allows the SACCO to formalize that existing social capital. And furthermore, they utilize alternative digital footprints.
Alternative footprints. So things like utility payments.
Exactly. Or, mobile airtime top-ups.
Oh, right.
Because in many emerging economies, citizens might not have a formal bank account, but they usually have a basic mobile phone, and they use mobile money to buy minutes or pay for electricity.
Right, that makes sense.
So ATMC's software APIs can ingest that telco data to basically build a proxy credit score.
Oh, that is so smart. If
Yeah.
you consistently pay your prepaid mobile bill on the first of the month for 3 years, I mean, mathematically, that is identical to a steady mortgage repayment history.
Yes.
You are demonstrating financial reliability. It's just happening on a micro scale.
And by validating that alternative data, ATMC transforms a cheap, basic mobile device into a fully functional personal banking tool.
Wow.
They allow these local microfinance institutions to safely issue microloans and microsavings accounts, pulling millions of invisible workers into the formal digital economy.
Okay, so let's play this out. You've successfully banked a rural farmer.
Okay.
They have a digital wallet, they have a microloan for seeds and fertilizer. But what happens when a drought hits?
Yeah, the real world.
Exactly.
Yeah.
That entire digital ecosystem is incredibly fragile if the physical world just throws a curveball. That farmer needs crop insurance. But if you're dealing with micropolicies worth maybe $50, you can't afford to send a human claims adjuster driving out to a remote village to inspect dry dirt. The administrative overhead would just bankrupt the insurance provider.
Absolutely. The math doesn't work. And this is where we cross into the realm of smart finance.
Okay.
ATMC solves that overhead problem by removing human bureaucracy entirely. They replace it with automated smart contracts powered by artificial intelligence and blockchain technology.
Here's where it gets really interesting to me, because I was digging into the execution layer of these smart contracts, and it is a brilliant piece of engineering.
It really is.
ATMC integrates their system APIs directly with external oracles, and in this case, local meteorological stations and satellite weather data feeds.
Right. Those oracles feed irrefutable real-world data directly into the blockchain.
Yeah. Let me see if I have the mechanism right here. A farmer buys a microinsurance policy on their phone, but that policy isn't a paper contract. It is a smart contract, like a self-executing piece of code living on the blockchain.
Yes.
And the code literally says something like, if the GPS coordinates of this specific farm receive less than 10 millimeters of rain for 20 consecutive days, trigger the payout.
That is the exact logic. And when the satellite data confirms that the 20-day drought threshold has been breached, the smart contract just executes automatically.
Instantly.
Instantly. It routes the digital funds directly into the farmer's mobile money wallet. No paperwork, no claims adjusters, literally zero processing delays.
See, the psychological impact of that instant execution is massive. I mean, if a farmer is watching their crops wither and the exact second the drought criteria is met, their phone just buzzes with the insurance payout.
It changes everything.
It builds unbreakable trust. They are immediately hooked on the digital financial system because they actually experience the safety networking in real time.
Exactly.
But I do have a question about the infrastructure here. Like, why use a blockchain for this? Couldn't a standard centralized server just run a script to pay the farmer?
Well, a centralized server could run the script, sure. But a centralized server can also be overridden by a corrupt human administrator.
Ah, okay.
Blockchain provides an immutable ledger. So once that smart contract is deployed, it cannot be altered or paused by anyone.
Oh, wow.
Because in traditional systems, banks or insurers often delay payouts just to earn interest on the float, the money sitting in their accounts while the claim is being processed.
Right, of course they do.
But the blockchain removes the float entirely. It removes the intermediaries. So by combining AI predictive insights with immutable execution, you are effectively automating fairness.
Automating fairness.
Yeah. The farmer in a remote village receives the exact same swift, guaranteed execution as a high-frequency trader in Manhattan.
I love that concept. But it brings us to a terrifying vulnerability.
Oh, what's that?
We've just established that ATMC's fintech architecture enables instant automated global transfers based on AI triggers and alternative data. We have millions of new users and money moving at light speed without human intervention. The attack surface for cybercrime, money laundering, and fraud must just be astronomical.
Oh, it is. It is the ultimate paradox of modern finance.
How so?
Because to protect the system from sophisticated cybercrime, the bank requires ultimate visibility into every single transaction.
Right.
But to protect the consumer's civil liberties, you require ultimate privacy.
Which usually sit on complete opposite ends of the spectrum. I mean, you can't have both.
Historically, no. But ATMC addresses this through the implementation of RegTech, which is regulatory technology, and their flagship security command center known as Sentinel AI.
Okay, Sentinel AI.
Right. RegTech utilizes automation to continuously scan the system for risk while adhering to thousands of constantly shifting global compliance laws. But Sentinel AI's true innovation is its zero-knowledge architecture.
Okay, I really struggled with this concept in the notes. Zero-knowledge architecture. I understand the goal is privacy, but logically, how can an AI system analyze my behavior for fraud if it has zero knowledge of who I am or what I'm doing?
Well, the AI analyzes the mathematical patterns of the behavior, not the identity behind it.
Okay.
It relies on a heavy cryptographic hashing pipeline. So your personally identifiable information, your name, your address, your actual account numbers, they never reach the AI's analytical layer.
Let me see if I actually understand the mechanics of this hashing pipeline.
Sure, go for it.
If my name is John Smith, the system salts it first by adding random unique data, right?
Yeah.
So it becomes like John Smith 847X. Then it runs that salted data through a cryptographic function called SHA-256.
Yes.
And this math basically converts John Smith 847X into a fixed 64-character string of absolute gibberish.
Exactly. A one-way string of gibberish. Even if a hacker intercepts it, they cannot reverse engineer the math to figure out your name is John.
Okay, so the Sentinel AI is only ever looking at the gibberish.
Yes.
But if that exact same 64-character string of gibberish attempts to buy electronics in London, and then 3 minutes later attempts to buy coffee in Tokyo, the AI instantly recognizes the impossible geographic velocity and flags the transaction.
You got it.
So it stops the fraud without ever actually knowing that John Smith is the one buying the coffee.
That is the absolute elegance of the zero-knowledge architecture. They achieve 100% GDPR compliance and protect user privacy while maintaining the full enterprise-grade power of AI risk scoring.
Wow.
It completely isolates the risk detection from the privacy vulnerability.
So what does this all mean when Sentinel AI actually freezes an account? Because AI is notoriously known as a black box.
Oh yeah, the black box problem.
Right. Engineers feed millions of data points into a neural network. It spits out an answer, and often the creators themselves cannot explain the specific algorithmic pathway the AI took to reach that conclusion.
Which is a huge problem in banking.
Exactly. If a bank legally denies a transaction based on an AI flag, they can't just tell a financial regulator, well, the computer said so.
No, regulators absolutely despise the black box problem. Accountability is mandatory in banking. You must be able to produce a logic trace.
Okay, so how do they do that?
To solve this, ATMC engineered Sentinel AI with a strict glass box philosophy.
Meaning the system is entirely transparent to the auditors.
Yes, it features what they call a transaction inspector.
Okay.
So when Sentinel AI blocks a payment, it doesn't just output a red flag. It generates a clear, human-readable logic trace explaining exactly why the neural network made that decision.
Wait, really? It explains its own reasoning?
Exactly. It highlights the specific weighted variables. It will literally output something like transaction blocked due to 80% weight on unusual geographic velocity paired with 20% weight on uncharacteristic vendor category.
That's crazy.
Yeah.
It effectively prints a receipt of its own internal thought process.
It does. And furthermore, it feeds that logic trace directly into the automated generation of suspicious activity reports, or SARs.
Oh.
Yeah, it turns a complex, multivariable digital investigation into a finished, legally compliant document in a matter of seconds.
That saves so much time.
So much time. And to ensure the system doesn't stagnate, Sentinel AI includes a module called TriggerBot.
I saw that in your notes. TriggerBot sounds incredibly aggressive.
It's a very fitting name. It's an automated stress testing module.
Okay.
TriggerBot acts as an internal adversary. It's constantly generating simulated, coordinated transaction patterns that mimic the latest known cyber attack vectors.
Oh, so it attacks its own bank.
Basically, yeah. And it fires them against the bank's own system to test the security team's response times and the AI's detection thresholds.
It is continuously sparring with itself to get stronger.
Exactly. And if we connect this to the bigger picture, the glass box philosophy and the zero-knowledge architecture, they are not just neat technical features.
No, they're essential.
Because trust is the absolute foundational bedrock of financial innovation. If users believe an app is spying on their identity, or if they believe an AI is arbitrarily freezing their money without explanation, the adoption rate drops to zero. Fast. Very fast. So Sentinel AI protects the institution's profit margins from sophisticated cybercrime, while simultaneously vigorously defending the user's civil liberties.
Man, stepping back and looking at this entire ecosystem based on all the research you shared with us today, it is a staggering architectural achievement.
It really is.
We started this deep dive looking at the physical paving, right? The deployment of core Band C+ databases and accounting software that gives local branch managers real-time solvency metrics.
Right, which then creates the foundation to bank the unbanked.
Exactly, utilizing alternative data and digitized community trust to empower SACCOs, and then deploying immutable smart contracts to protect vulnerable supply chains from real-world disasters.
And all of it secured by a glass box AI that evaluates risk and moves capital in milliseconds without ever compromising personal privacy.
Yeah. It's a reminder that whether you are tapping a contactless card, or investing in a fractional stock app, or managing the payroll for your small business, there is a massive, invisible architecture of cryptographic hashes, API tolls, and AI command centers quietly operating in the background of your daily life.
It is quietly rewriting the rules of economic participation for everyone.
Hmm.
But, as we look toward the future of this technology, it does raise an incredibly important and honestly somewhat unsettling question to ponder.
Oh, I always look forward to these. What are you thinking?
Well, we spent this time exploring how ATMC's tools are revolutionizing the financial sector. But if you look closely at their corporate footprint, they aren't just building banking software.
Really? What else are they building?
They build health tech platforms that manage sensitive electronic medical records. They build ed tech platforms that track student performance and workforce certifications. They build logistics platforms monitoring global supply chains.
Wow.
And all of these disparate platforms are built on the exact same underlying digital architecture.
Wait, they all run on the same APIs? They speak the exact same code?
Yes, which means the interoperability is already there.
Oh, I see where you're going with this.
So what happens in the very near future when these verticals begin to seamlessly interface? I mean, if the AI that calculates your proxy credit score is suddenly able to communicate effortlessly with the AI tracking your medical prescriptions, your educational background, and your digital government ID.
That's a lot of data in one place.
It is. Who truly holds the power of that interconnected digital ledger? And what does a perfectly efficient, fully integrated digital identity actually mean for the future of your individual autonomy?
Man, that is definitely just something to keep in mind the next time you tap your phone to pay.